If you're planning to buy a new build property in the UK right now, I need you to stop scrolling and pay attention for the next 12 minutes. What I'm about to share could save you from making the most expensive mistake of your life. The UK new build market isn't just cooling down. It's on the precipice of a significant correction that most first-time buyers simply aren't seeing. And the developers, they're hoping you won't notice until it's too late. I'm going to walk you through exactly what's happening, why 2026 could mark a pivotal turning point, and most importantly, what you need to know before signing any contracts. Let's start with an uncomfortable truth that the property industry doesn't want you to understand. New build homes in the UK carry what's called the new build premium. On average, buyers are paying between 15 and 30% more for a new build compared to an equivalent secondhand property in the same area. That's not speculation. That's data from multiple independent valuations over the past 3 years. But here's where it gets interesting. That premium isn't based on superior quality or better value. It's based on marketing, sales incentives, and the psychological appeal of being the first owner. Developers have mastered the art of creating urgency through show homes, limited time incentives, and help to buy schemes that mask the true market value. Let me give you a concrete example. Now, in a rising market, buyers could justify this premium with the assumption that all properties would appreciate together. But we're not in a rising market anymore, and that's where the problem begins. Here's what happens the moment you complete on a new build property. Your mortgage lender based their loan on the purchase price, which included that new build premium. But within weeks of moving in, if you needed to get the property independently valued, surveyors would likely value it at 10 to 20% less than what you paid. This creates immediate negative equity for many buyers, particularly those who've stretched themselves with a 5 or a 10% deposit under schemes like the previous Help to Buy program. The situation intensifies when you try to sell. Estate agents will compare your property against the broader market, not against what you originally paid. And buyers shopping in your area will see both your former new build and genuinely cheaper resale properties. Guess which one offers better value? Banks and building societies are already tightening their criteria around new builds. Several major lenders have increased the minimum deposit requirements for new construction or added stricter stress tests specifically for these properties. They understand the risk, even if retail buyers don't. The Council of Mortgage Lenders has noted a concerning trend of new build buyers facing difficulty when remortgaging because the property no longer values at the original purchase price. This isn't hypothetical. This is happening right now across the country. Let's talk about something the industry really doesn't want discussed: build quality. The UK has been building homes at pace to meet housing targets, but speed and quality rarely coexist harmoniously. The National House Building Council recorded over 50,000 new build defects in the past year alone. From structural issues with foundations to cosmetic problems with finishes, the complaints are mounting. Walk through any new build estate that's 3 to 5 years old, and you'll see the evidence: subsidence cracks, drainage problems, inadequate soundproofing between properties, and shared freehold arrangements that become maintenance nightmares. The cladding scandal should have been a wake-up call. Thousands of new build apartment owners discovered their properties were not only worthless, but potentially dangerous. Many still can't sell or remortgage years later. While that represented an extreme case, it highlighted systemic issues with regulation, oversight, and developer accountability. Consumer advocacy groups have documented that new build buyers are significantly more likely to experience defects in the first 2 years compared to those who purchased older properties. The NHBC warranty is supposed to protect you, but navigating claims can be arduous, and many defects fall into gray areas where responsibility is disputed between developers, contractors, and warranty providers. Now let's examine why 2026 specifically represents heightened risk for new build purchases. First, mortgage rates remain elevated compared to the historic lows of recent years. While there's been some stabilization, rates are still hovering around levels that significantly impact affordability. Fixed-rate deals that borrowers secured 2 to 3 years ago are expiring, forcing remortgages at substantially higher rates. This reduces purchasing power across the board. Second, the supply pipeline is full. Developers ramped up construction dramatically over the past several years, and many of those units are coming to market simultaneously. Basic economics tells us that when supply exceeds demand, prices adjust downward. Several major house builders have already reported growing inventory levels and slower sales rates. Third, economic uncertainty persists. Employment concerns, inflation's lingering effects on household budgets, and general economic malaise are making potential buyers more cautious. First-time buyers, who typically fuel new build sales, are finding it harder to save deposits and qualify for mortgages. Fourth, government schemes that artificially supported new build prices are winding down or have ended. Help to Buy, which overwhelmingly benefited new build developers, concluded in March 2023. Without these demand-side subsidies, the true market price of new builds is being revealed, and it's lower than developers want to admit. Several analysts are predicting a correction in the new build sector specifically, ranging from 10 to 15% over the next 12 to 18 months. This wouldn't necessarily mean all property prices fall by that amount, but rather that the new build premium compresses as these properties align more closely with resale values. We need to discuss leasehold, because this has become a particularly egregious aspect of new build sales. Developers have been building houses, not just flats, as leasehold properties and selling the freeholds to investment companies. Buyers then face escalating ground rents, permission fees for basic alterations, and difficulties selling later because mortgage lenders are increasingly wary of problematic lease terms. Some new build leases contained doubling ground rent clauses, making properties virtually unsaleable. While legislation has addressed the worst practices, thousands of homeowners remain trapped in these arrangements. Service charges on new build estates are another concern. Shared spaces, communal areas, and estate management fees can run into thousands annually, with limited transparency about how money is spent and minimal accountability for the managing agents. So, if new builds represent such poor value, what's the alternative? Consider resale properties. Yes, you might need to redecorate or make some updates, but you're buying at genuine market value without the premium. You can get independent surveys, negotiate on price, and you can see exactly what you're buying without relying on show homes and CGI images. Look for properties that are 3 to 5 years old. You get the relative modernity without the new build premium, and any initial defects will likely have been identified and remedied. If you're set on new construction, wait. The market dynamics suggest prices will be more favorable in 6 to 12 months as developers become more motivated to clear inventory. Increase your deposit if possible. The larger your equity stake, the less vulnerable you are to value fluctuations and the better mortgage rates you'll access. Get independent advice, not from the developer's recommended broker or solicitor, but from professionals who work solely for you and can provide objective analysis. The UK new build market in 2026 presents significant risks for buyers who don't understand what they're really purchasing. The premium you pay, the quality concerns, the economic headwinds, and the structural issues with leasehold all combine to create a perfect storm of potential financial pain. This isn't about fear-mongering. This is about informed decision-making. If you understand these risks and still choose to buy a new build, at least you're doing so with your eyes open. For everyone else, patience and research will serve you far better than rushing into what might seem like a dream home but could become a financial nightmare. If you found this valuable, subscribe to UK Economic Report for more analysis that cuts through the industry spin. And please, share this with anyone you know who's considering a new build purchase. Knowledge is power, especially in property.